Hey folks, and welcome to the Pipnotic Symposium for the 27th of May 2019. Today we are going to talk about something that Samit requested, indicators. And so I'm going to talk a little bit about using indicators, why we might choose to do so, and also why we may not choose to do so, and ultimately wrap up by showing some interesting configurations on the supply and demand software. Okay, so if we discuss indicator, what is an indicator? An indicator is nothing more than a secondary representation of price. And so you have the price feed that you can see here on your terminal, and an indicator is reading this information, is performing some calculations, and it's presenting essentially the same information differently. And this can be both good and bad. If you're looking at, for example, currency strength, which I'm rather partial to, it can show you the tendencies and the developments in the relative strength between two currencies very clearly and visually. And so this, for this purpose, indicator, a currency strength indicator is very good. But if you look at an indicator like, let's just grab one. I deleted most of, actually I put them in the, let's show, I don't know, bands. Cool, let's just click this on. Just look at this Bollinger Bands indicator. I've never used it, and so I don't really know how to use it, but we'll just have a look at it. And you can see that if you have an indicator on the chart, I mean, what's the first thing that your attention is drawn to when you look at a chart? Well, for me at least, my attention is drawn to these colorful lines. So if let's add another one, Ichimoku. Let's put that on there. Okay, I shan't put any more because it looks pretty crazy. But if you look at this, I mean, the first thing you see is, you see this pretty thing here, this pattern where you have like the bullish colored Ichimoku going up. Sorry, I don't even know how to say these damn words. And then we have this other one. We have this line here, and it goes down. Okay, and while if you're really good at interpreting what this information means, it can be very useful. But for me, every time you put an indicator on the chart, I mean, my attention is brought to the indicator and not to price. And this is where, in my perspective, you can get into trouble. And so you have price in the back. You almost can't see it really because it's covered with these lines. And so essentially I'm looking at this, and you can see, I don't know much about the, how do you even say this, Ikimochu, these clouds at least, but you can see that, I mean, now we have the cloud price below the cloud, and so we're bearish. Here we have price above the cloud. You're bullish. Okay, but notice where this happened. If you have a look at this, you can see that the bullish trend stopped here, then it changed here. But look how far price had already traveled. It had already left here, and it went down to here. So it already moved 62 pips. Okay, we're on the hourly chart here. So the move essentially has already taken place. And so if you're looking at an indicator, you're looking at a very delayed reaction to changes in price. And this is the guy that mentored me, Chris Laurie. He used to tell me that if you're looking at indicators, then you're looking at something that has already happened. It's showing you what has already happened historically. But he said if you're looking at price, then you can see what is happening in the moment. And I took that a little further and said, if you look at price, it brings your attention to what is about to happen in the form of liquidity distribution models on a chart, on a price chart, which you can't see. And so you train your eyes to see where we have high probability reaction points. And so, I mean, looking at this information here is really, really detrimental to your trading. I'm not saying it can't be done, but at least for me, I'm very uncomfortable and I get very confused when I look at a chart that looks like this. And so this is why I'll always get these indicators and I'll remove them, because they confuse me. So when you remove everything, you can see only price, pure price. And this for me is a very powerful concept, because you're looking, when price leaves like this, when we have a pattern like this, price goes up and then it goes down, you know that you want to be selling, because we have that pattern. The software's drawn this nice this rectangle here, so you know you want to be positioning yourself short. Why? Because price has reacted to something over here. So we had an influx of selling pressure at this price level. And here, when this candle is closed here and price leaves, we have accumulation. Right here we have the white candles, price goes really deep. What's that telling you? Well, that tells you that we are very likely going to see people starting to buy. But if you look at the one of the other indicators, sorry, the clouds indicator, you're getting this information when price was here, just approaching a 4-hour level of supply. And so you really have to be careful. And so, I mean, I don't really use indicators. I mean, I use my indicator, it's the currency strength and supply and demand indicator, but I don't refer to them as indicators. I like to use them kind of a utility or a tool, because they're essentially helping us do what we need to do in order to trade. And so it's super important that you, when you put a new chart on, that you're starting with a naked chart, instead of like starting with a chart that has everything on it. See if I have some template. I've deleted them all, but sometimes on a default MT4, MT5 installation, when you open a chart, it has a bunch of stuff already on it. It's got ATR, which can be a very good utility, and it has other stuff. And so the default stance is secondary representations of price, which is a dangerous game. Okay, and I'm not saying that you can't do it. I'm just saying that it can be difficult. Okay, I'm not criticizing them, but for me it doesn't work. It doesn't work at all. Okay, and so I like to use stuff that has been proven to work over time, and for me that is supply and demand. Supply and demand is a very powerful concept because it's showing you where buying and selling historically has happened and where it's likely to happen again in the future. All right, so enjoying a nice freshly roasted, freshly ground cup of Balinese coffee. Delicious. Okay, so we have a lot of people in our community who really like to trade on the small time frames. And so if you're using indicators, secondary representations of price on the small indicators, you're seeing an awful lot of price fluctuations that seem very, very volatile. And so again, it's a good idea to, this is speaking generally not only in relation to indicators, but in relation to trading as a whole. It's a really good idea to gravitate to the higher time frames. So moving up to the daily and even the weekly and the monthly charts. And I'm an advocate of this because, yeah, I mean, if you look at the robot, for example, I had a robot, I still have the robot, it's running on many different accounts, and it's not trading on the 5 minute or the 1 minute, it's trading on the absolute lowest is the 4 hour. And I prefer to put it on the daily and the weekly. And this is a really interesting way to trade because, I mean, if you're trading in line, for example, with the interest rate differentials, as you can see here, and you're trading at levels of weekly and daily or monthly supply and demand, I mean, this is where the market is going to turn. If you're looking at 1 hour, 50 minute, or 5 minute supply and demand, I mean, there's not a lot in there. You're going to get these intraday moves, and if you're in front of your computer, then you can certainly take advantage of that. But if you don't want to spend so much time in front of your computer, then it's a really good idea to have a more set and forget approach where you are focusing on these longer term areas of supply and demand. And I'm going to show you something that will help drive this point home. I mean, here, if you look at the indicator here, I mean, it's showing us areas of supply and demand that were valid but have been consumed. So we had this one here, price tested it, okay, and then it went down. So that was a nice one. We have this one here, price tested it, and it went down. Nice one. We have another one, price tested it, it went down. We have this one that's tested. Okay, this is not helping me make my point, but what I'm trying to say is that while we do have these areas of supply and demand that work on the smaller time frames, if you go to a time frame like, for example, the weekly, okay, and you have a look, and you have this one here, we have a tiny area of supply, price reacted, and then it dumped. Okay, we have another one here. We had a really big move. I mean, these are really, really big moves. So we go from here to here. That's a 550 pip move for a 120 pip stop. I mean, those are really good risk rewards. And while some of them are going to lose, we have this one here. Price poked in. We accumulated above the area. This is a warning sign we should have been out of this trade, so this should not have been a loss. I mean, price will move against them. And you have this one here, which has currently been tested. Let's find it. Just down here. Okay, price tested that. And look, it's gone and gone and gone. So the risk would have been maybe max 2 times this area. I mean, look at this. It goes on and on and on. And where do you get out? We get out at opposing supply, which is where? Which is right here. And so the software is doing this for you. It's an absolute gold mine just waiting to be mined, and it's sitting right in front of you on your chart. And if you go to these bigger time frames like the weekly, I mean, amazing things will happen. The problem, I think, for most people is that we want some action. I want to engage in the market. Where we have this mentality where we're used to working a job, where we're paid for what? For our time. And so as a trader, you feel that, okay, man, I'm sitting in front of the charts. I need to get paid. It doesn't work like that. So you have to completely change your the way you perceive your time, selling your time when you're trading, especially longer term, because sometimes there'll be a week or 2 weeks where you don't get any trades, and all of a sudden the trade will be filled, and then you'll start earning over the course of, well, as the trade develops. And so it requires like a conscious shift in perception in relation to how we're getting paid. Because I mean, when you're trading, you are no longer trading your time for money. You are trading your effort or the value that you can add to a chart in the form of trading decisions for money. Okay, so that's your commodity. One of the reasons that we moved to Bali is to get away from that mentality. Back at home in Copenhagen, I mean, we were running really, really fast. We weren't running as fast as most people, but we were selling our time. I was selling my time. It had a price tag. And so we take the thing that's absolutely positive, the most valuable commodity that we have in our lives, which is our time, and we sell it for pretty small amounts of money. And for me, I think that's ludicrous. And so we should be in trading not because we love it, but because it pays us well, and it goes contrary to the way mainstream society is moving. This is not working harder, this is working smarter. And so you really have to move away or release this whole concept of selling our time, because as traders, we're not selling our time at all. And so I really want you guys to understand this shift in mentality and why it is required in order to trade successfully. Yes, I mean, I love to trade like shorter term, and I like to kind of get in there and engage in the market. But unless I have a really nice reason to buy or to sell, I'm doing this on a demo account just so I can get out of my system. Okay, and so you just have to be really, really mindful of this, because it's going to be affecting your decision-making progress. You're going to be forcing trades. You're going to be getting in late because you want to get in these trading opportunities, and it's going to be detrimental to your trading. And I know a lot of guys that are trading a smaller time frame, and they're doing very well. And this is because, well, they're maybe more in front of the charts than I like to spend. Of course, I'm looking at the charts for several hours a day, and this is just me stalking trades, developing the software. But I think the vast majority of my time is actually developing software, refining the robots, clicking it on, clicking it off, making updates to the software. So most of my time is actually spent programming software, not trading. But I do have many symbols that I watch, and I set them up, and I mark off my levels, and I put in orders. But most of the time I'm waiting. It's a waiting game, and I'm waiting a long time. There was a CAD trade that I waited for half a year. This one right here. I waited for this trade for ages. I mean, the software marked it off ages in advance. Price went up to it, and then it left. I mean, look at this. If we go to the monthly chart, you can see the area right here. I waited and I waited and I waited. I saw this and I said, wow, I want to be short the CAD when it gets there. And look at this. This is an absolutely incredible trade. Let's say 275 pips, and it went 2,200 pips. It's incredible. It's absolutely incredible. And it did it in 3-4 months. Okay. And now we've moved away. Now we're moving up. Looks like we're challenging this area of supply and probably going to move through it. So it's just a really good idea to try and change your mentality and relation to trading. Okay, so let me just show you again what these areas look like. You can see that the configuration of my indicator is probably a little bit different, and this is because I've been toying with a lot of settings. I have this greater period multipliers 0,1234, and in the previous version of the software, this might have been a little bit tough on the software because it had to do a lot of calculations. I removed the update feature, which was a call home to pipnotic.com to get update information, and this means sped up the indicator, I think, tenfold, especially when you're changing timeframes, as it did not require access to the network. So if you're sitting on a really slow network, you'll experience a relatively poor response times if you had a configuration like this. But I have this running on like 30 charts like this, and it's running like a Ferrari. Okay, then we have this one here, accumulation departure strength, and I've set this to the smallest setting. Why? Because this is bringing everything to my attention. I want to add discretion to what the indicator is showing me. If I put this up to intermediate or macro, well, then I'm going to be shown less, and I want to see much more so that I can make the trading decision myself. Then I have a risk reward ratio, and this is set to actually yesterday I changed this to 2. Before it was 3. Okay, so we want to see at least a 2-to-1 risk reward, and we want it to take no more than about 6 periods to reach that distance. And this for me seems to be working out really, really well. And the rest I'm not fiddling with so much. I have my risk is here 0.25%, which doesn't really matter in this context. But in these settings here are the ones that you should be focusing on. And on the smaller time frame, you're going to be seeing a lot of information, but on the greater time frame, you'll be seeing a few, but you'll be seeing only the really good ones. And if you look here, you can see how great they are. Well, we haven't really tested many. We had this one here, which is a child. The parent was here. We had this one, which was a child. The parent was here. I mean, these worked out very nicely. We have this one, which is amazing. This one, which is amazing. We have this one, which is amazing, which has been tested. We have this child, which is lovely, and price is not returned to. Then we have this one down here. I guarantee you that when price comes down to here, and up to here, and up to these here, I mean, price is going to bounce. Okay, if you go to the weekly chart, which requires slightly less patience, I mean, we had this one here, nice reaction. We had this one here, which saw the reaction here, and we had a tremendous move. Okay, so you would be trading the first one, not the second one, maybe the second one, depending on what price does when it gets there. We had one test. I suppose this is a reaction to the child, and then price went up through it, and it came back down, and then it was consumed. Okay, then we had this one here, which is reaction to this one. We had this one, which is reaction. We had this one here, which price is currently feeding on. But if you notice in here, I mean, there's no demand here. There's nothing here. The indicator hasn't found it. The only fresh demand is here. This is just like levels, price testing previous levels. So there's not a lot going on here. So I'm expecting price to maybe wriggle a little bit deeper. If we get this trend line break here, that would be lovely. We also have this area down here. And so on these bigger time frames, I mean, price is really giving you some tremendous trading opportunities. Had this one here, test, down, this one here, test, this one here, test. And so you notice that these levels are really, really good. Okay. When you have areas like this, where you have this area of supply, which has been tested many times, you have this area of demand down here, this big one here, this accumulation, it's been tested 2 times. You don't want to be trading in the middle, you want to be trading at the extreme, so selling at this supply and buying at this demand. And you can do this, you can wait for price to react and poke into the area and go to the smaller time frames and find these micro areas of supply and demand and trade on those. But I mean, I'm looking at the weekly chart, and of course, I mean, it requires that you have if you want action on the weekly chart, then you just trade more positions. And if I look at my open one here, I mean, look how many symbols I have open. Let it load. You can see I have way more things to trade here. And this is how I create quote unquote action in my life. I just trade more symbols. Okay. And so if I'm looking at one pair and I'm trading on the weekly chart, I might get one trade a month or one trade every 3 months. And so you just take that and you multiply it by the number of symbols, and you have 30 symbols, and you'll maybe be getting one a week if you're looking at many different kinds of currency pairs and commodities and indices and all stuff like that. Okay, so I take my charts like this and I mark them off. So I start on my monthly chart. I zoom out. What do we have? We have this weekly supply. We're reacting at it. Do we want to be buying or selling? We want to be selling. Why? Because we reacted on a weekly supply. The robot begs to differ. It's looking at the 4-hour chart. But as discretionary traders, we only want to be selling when we see something like this. And you can see prices reflecting this very clearly. So we'll probably have a bounce here or here. And where do we buy? Well, you buy down here. And so I want to start to look on my discretionary trading account. I'm going to be selling up here. So I'm going to be going to the smaller time frames, which for me is going to be, for example, the daily, and I'm going to look to sell. So price poked in here. We saw a reaction, which is confirmation that price wants to move lower. Then you go to smaller time frames and you look for places to sell. We have one here. Okay, it's nothing. It's pretty messy in here, but this is a really nice release. I wish the robot could see this because it might make it a little bit nervous. So maybe as a discretionary trader, I'd move my target up to around here, because this is pretty close to where price will probably have a bounce. Okay, let's look at the pound. What's going on at the pound? When I look at the pound, and we're pretty range bound, you can see that. And we had market structure failure. Mark it off like this. So it's a market structure failed. Market structure failed. Moved above this high. Price moved higher. We had this area of demand here, which was tested once, twice. Now it's going down. The area that did it is this one here. Is that one there? So expect price to maybe bounce there. Does this mean that we are in a downtrend? Actually it does, because we have downward sloping trend line here. So this is the most recent trend line. So let's remove this one. Focus on this one. So now it looks like we're in a downtrend. And so we want to be short. The robots found that, said yes, we want to be selling, which is super. And so you look for places to sell at supply. So, I mean, if you're looking at the small time frames, it's not possible to be mindful of what's going on in the higher time frames. And so it's a really good idea to click on these big time frames and have a look. And notice here on the pound that we had a low, we had a high, and we formed this lower base. And then now we're testing that base. So currently we have kind of like a bit of confusion in the market, and we can expect that as well, because the Brexit thing is kind of getting strange. We have this going on. Okay, so what does that mean? Well, that means that maybe we should wait a little bit and maybe not get involved in trading this for the time being, for longer term purposes, because I mean the market is looking to be squeezed a little bit, and this is actually something that we can expect to happen, because there's so much uncertainty about Brexit at the moment. Okay, so price is going to get squeezed here, and then we'll find out what happens once price pops higher or lower. But this is pretty far into the future. If we look at this, we can see we have the downward trend here. There's no demand here. We have a little bit of demand down here, maybe below price here. And so price could continue falling for the pound American dollar. We also have a really strong dollar at the moment. Uncertainty in the pound. The swaps are telling us that the smart money is probably short here. And so all this information together, which we glean from these bigger time frames, gives us really good directional biases for the smaller time frames, which for me would be the daily or the 4 hour. Okay, let's have a look at the euro, see what the euro is doing. So if you look up here, what's the euro doing? Well, we reacted at this monthly supply. I mean, look at that. Look at this trade. So if you'd have just like said, yep, it's going to limit sell here, you had a 425, 430 pip area there of supply. Price went 1300, so we've got like over 3 to 1 on that. You know, just being really, really patient. Then you don't care, you know, even the craziest news is not going to cause price to poke up like that in 5 minutes. It's going to take time to be digested. The flows have to be committed to the market, and so there'll be ample time to make trading decisions. So you see this on your chart, you put in your order, and then you wait and you check on your telephone. Okay, so I mean, what I'm doing is every day I run through all of my instruments and I have a look and I update my trend lines, my rectangles, and I leave it at that. Okay, and I do this on my longer term account, and I'm really comfortable doing that because I don't want to read the news all the time. I find the news quite depressing, and so I try to stay away from the news as much as possible. And so when you're paying attention to the major flows, you don't have to pay less and less attention to the news. If you're trading on the 50-minute, half an hour, 1 hour, then you have to know what's coming out, what kind of data releases are coming out throughout the day. Because if you don't, then you're going to get in trouble. Okay, let's have a look at the dollar, Japanese yen. This is one we just looked at. We're range bound. So when price comes up here, you want to look for confirmation that this level of supply is going to hold. Price comes down here to this area here, which is still untested. I mean, look what happened last time price went down there. Well, we had a huge rejection, and so there's probably still some buyers located in this area here, which is actually a nested monthly area. Just here, and look at this. And the price came down, it went up, it went down. We had huge rejection. Then price popped up. So if you would have just taken this one here, 200, price went almost 600. So we had our 3 to 1 there already. Okay, let's have a look at something else. What's going on here? Well, we have this monthly supply. Price left. Price poked up into this weekly supply. And now we're getting ready. Looks like we're kind of accumulating to do something. We don't really know what. There's a lot of selling up here. I mean, there's a lot of stuff going on at the moment in America because of Trump. But I mean, that's pretty much the status quo at the moment. I think all this stuff is already priced in, which tells us that we have to pay attention to these areas of value. Here we have tremendous value. People that really are looking to exchange liquidity at this level here. And this is a really nice area, and the software is telling us where it is. So look to sell when price comes down to this area. If you go to the daily chart, you see the same thing. We had this really nice area. Price came down, accumulated, left very quickly. We poked into it, and price is moving high, and it's reacting to the edge of this monthly supply here. This looks nice up here, the one we could see on the other chart. Okay, so we have this one here, just an example. This one here has been tested. We have this one here, which is the beginning of all of this. What's this? This is areas testing areas. So we have a lot of children in here, which tells us there's probably not a good idea to engage in any of these. And so while the software is bringing these really nice areas to our attention, we still have to use discretion when trading them. Here we had price sold off. Acuna we sold off. We had this move here. The origin of the move is here. This is a continuation pattern, which is lower probability. This is the turning point in the market. So there is selling at this area here. Okay, supply, price tested it. What happened when that happened? We had our trend line. We had market structure. It failed. We had supply that was consumed by demand. What demand did it? This one did. Here. The software told us about that ages ago. Here. Boom. Look at that. So we have 58 pips. The price went 300. We can push it almost 350. It's crazy. It's incredible. And you don't have to get out until you approach this. We have this here. It's pretty close. If you take the wicks, we would have been warned. So your stop, your modest stop, so our target would have been located just around here, because here we have accumulation. It's a big ugly one, but it's still accumulation. Okay, and price really moves. Why? Because we're looking at these really, really, really big time frames. Okay, because this is where the major flows are happening. When the banks are looking to change some serious cash. I have a friend here. He sold a pharmaceutical, well, actually like a med tech company. He's an Italian guy. He sold this med tech company to a company in the US, and he sold it for about $50 million. And he's asking me every week, okay, Sri, when do I convert my American dollars into euros? And so we have this discussion. And am I advising him on the 5-minute chart? I really am not. I mean, I'm looking at this stuff here. Okay, and you can see the euro is going down, which is good for him because he's going to take his dollars and buy euros, so he'll get more euros for his dollar. And so, I mean, you have to be paying attention to this kind of stuff here. Okay, this is what the banks are doing. This is what very wealthy people like my friend and many other people are doing. They're speaking to their bank. Okay, when's a good time to make this transaction? And so they're constantly following, or they're not obviously, but the people who are facilitating the financial exchange, they are paying attention to the big turning points in the market. Because I guarantee when my friend converts his money, he's going to be doing it in, like, I don't know, big lumps of maybe tens of millions of dollars, and you'll see this in the market when he starts to do this. Okay, so the major time frames are absolutely your friend. We have another one here. Do you want to look to buy when price comes here? Absolutely. And the software told you that we should be starting to buy this. 1, 2, 3, 4 here. So on this, when this candle closed, this rectangle is drawn. Okay, so there's plenty of time to plan the trade. When 1, 2, 3, 4, 5, 6, when this blue candle closed here, the rectangle is drawn. It's saying sell. Look at this, sell. Price went up there and it moved down. I remember when price came up there. Okay, so we'll leave it at that for the time being. So, I mean, to sum up today, pay attention to the large time frames. Look at this. We have a nice area of weekly supply here. We have, this is just an example, price doing this. We had the squeeze. Price finally broke out of it. The area that caused all of this is this area here. Price is getting pretty close. It got pretty close to it, but then we retreated. The beginning of the sell zone was here. Price didn't even get up there. So when price comes up here, we're probably going to have a bit of a bounce. And I'd say a pretty big bounce. If you look below price, there's nothing. We have this one here, which is kind of a reaction to this, and there's nothing until we get down to here. There's probably something in here, I'd say, which is below this mess just here. So we have kind of a really messy sibling structure here. Then we have the parent down here. Okay, so I'm thinking that price will probably come down to this area, maybe have a bit of a bounce. But look at the risk reward on this. Okay, so you can see that, I mean, the overall flow is like we had down, up, and now we're moving down. Okay, and it's not gonna, and this high is lower than this high, which tells us that we have a keen interest on pushing this lower. Okay, we also have that here. We have this and this, so it's going down. Okay, and we have, I mean, price keeps moving below these. We have gray. So this tells us that price has violated them, and so price is moving down. So we want to be selling at supply here. Okay, so just pay attention to this stuff on the big time frames. So the big time frames are your friend. This is where the major flows are visible. You're not seeing this stuff in the small time frames. Cool. I'll wrap it up. If you have any questions, please shoot them off in the Discord channel. And if you have any requests for the next symposium, please send those in there as well, and I'll get those sorted as soon as I can. Thanks for watching.